Hey guys, welcome back to your favorite channel, Immigrant Millionaires, with your host Kavisha Behrani. This is the channel where we discuss everything money. So if you guys have not subscribed yet, please consider subscribing because here we talk about all about wealth creation and growing your wealth and all that. So last week the concept that I had covered was about why I do not invest in individual stocks anymore. I mean, for the large part, I do not invest in individual stocks with some exception here and there. And then this week, I want to talk about another mind blowing concept with you guys, which is called the power of compounding. So stay tuned. So, with that in mind, let's discuss what is compounding. Even before we get there, right? In my last video, I spoke about index funds. I talked about why I do not prefer to invest in individual stocks anymore, whereas I now invest in heavily in index funds. There are many variety of index funds offered by different brokerages. I prefer investing in index funds largely because it is passive investment plus long-term growth potential. On a longer time period of, let's say, 10, 15, 20 years, you see that you get almost a return of 10 to 12% year over year. Now, when I say a 10 to 12% year over year growth, a lot of you must be thinking, what is she even talking about? So don't worry, we'll get into the weeds. I'll walk you through the numbers in a spreadsheet so that you clearly will understand how mind blowing this concept is and what did you miss out up until now. With that in mind, let's get started. The problem with compounding is that we try to simplify it very much. And I'm guilty of doing the same thing myself. So today, without wasting much time, I'm going to get into the weeds and we'll walk through the Excel sheet which has all the numbers plugged in. And I'll show you how a hypothetical scenario looks like. By hypothetical, not really hypothetical, it means an ideal scenario looks like, and what is a very realistic scenario. And once you understand the numbers, you will be blown away by how magical this concept is. So I'm not going to take the thunder away and let's get into the numbers here again. So let's say for simplification purpose, I'm just taking an example of 10 years in which, let's say, first year, my initial amount of investment is $100. And since in the index fund example, I was giving an example of 10% per year growth. So I'm saying 10%. So 10% of 100 is $10. And let's say by the end of the year, my corpus becomes 110. Now, the magic of compounding here is to understand that next year you don't start with 100. Now, your base becomes 110 because 10 is the interest that you've earned on that. So, now your growth of 10% will happen on 110 and not on 100. So, 110 is the base for next year. Now, 10% is the growth. So, 10% index fund growth, right? So, whether you invest $10 or you invest $100 or $1,000 or $100,000, it has no favorites, right? Mathematics has no favorites. So whether you have $100 invested, 1,000 or 100,000 or a million invested, 10% is a big number. 10% growth year on year basis over a long term, it's fabulous. So look at the magic now. So next year the base is 110 on which you have another 10% growth. So now instead of 10, your growth is absolute growth is 11. So the total number now this year becomes 121. Now the magic starts again. Next year, the base is 121, and on that, you have a 10% growth. So the absolute growth is 12, and then dollar amount is 12, and then the total number at the year 3 is 133. So as you see, right? So your ending number of 1 year becomes your base number for next year, and you are getting a growth of 10% on that number. So even without you putting in anything extra, see right now, for the sake of simplicity, I'm showing an example wherein I'm not plugging in anything extra. Even though, when you talk about compounding, let's say you talk about your investments or you talk about you know your wherever you're parking money, whether that's fund or wherever, right? You are parking money extra from your each paycheck also. It's not that you will park $100 and you forget about that, but just to understand the magic of compounding, which is why Albert Einstein called it the eighth wonder. And you'll understand why it is called the eighth wonder. So now, without you putting in extra anything extra in this example, see how the growth is happening, right? So now at the end of 10 year, your $100 has become $259. And just to just to clarify one more point, right? Compounding is such a beautiful thing that no matter how small the amount is. See, everybody cannot invest the same amount. Somebody may have $500 extra, somebody may have $100 extra, somebody may have $1,000 extra, somebody may have $5,000 extra. So regardless of, the three component which goes into compounding, one is the, three components that go into the final amount. One is how much you've invested each month. One is your, the time duration, and the third is the interest rate that you get. Out of all three, right? Time duration is the main component of compounding, right? Because it totally relies upon the longer you stay in the game, the more money you make. And that is because, with time it compounds. See, when you're looking at the 10-year time frame, your $100 has gone into $259 without you putting a penny extra there, right? Now, just extrapolate this timeline, right? Talk about, let's say you're talking about 25 years, right? Now 25 years without you putting anything, that $100 has gone up to $1,000. You haven't done anything, right? In this example per se, you haven't put in any extra money, whereas in real life you will be putting you'll be putting some money out of each paycheck or something. So this is just to showcase the power of compounding. And in reality, see, $100 is a small number for anybody to put in per month. So this was just for the sake of simplicity. Let's say I'm going to make it $1,000. Look at that now. Because the percentage growth is same for everybody, you, me, or anybody else. 100, $10, $100, or $1,000, or $100,000. You just need to plug in the numbers in your spreadsheet and see how the magic happens. And here we've just spoken about 25 years, right? Let's extrapolate the numbers to see the magic. See, at the end of 40 years, your $1,000 has become $45,000. Now, can you even imagine, in real life scenario, right? You'll be plugging in some more money into this each month, each pay cycle, or with each bonus that you receive, or each extra money that you receive, right? It's mind blowing. I mean, mind blowing. If I was to draw some, chart for this, let's say I'm going to make a 20-year chart, right? So let's see how the chart looks like. See. And now, and these are on the x-axis, these are my years, right? These are my year 1 to year 20. Now, if I was to, extrapolate that to, let's say, 45 years, look at it, right? And let's say if I'm further going to make it bigger, longer time perspective, then see, yeah, let's say year 134. I just want to show you something here real quick. See, this curve, right? This is called an exponential curve. And the beauty of this curve is, if you carefully notice now, at least as per this curve, right? Of course, this is because we're looking at a longer time frame. For the first 70, 73 years, you don't see any growth at all. Let me just shorten up. Let me just make it, much smaller for a much smaller time frame so that I can make you understand this concept much clearly. Shorten the time window. So from 100 plus years, let's say now we look at just 45 years, right? Now look at this graph, right? And what I wanted to show you is, if you realize, right, if you look at it very closely, you will realize that, you probably will think that probably in the first 10, 11, 12 years, there's hardly any growth, right? Because the power of exponential growth kicks in as time increases. You see, now you see from here, this $1,000 over a period of 45 years has yielded almost 73,000, right? 72,890 to be precise, almost 73,000. Can you imagine? Can you wrap your head around this concept? Now, again, as I said that, this is the most simple form of explanation. Now, in real life, you will, of course, be, with every pay increase, with every paycheck, with bonuses, as and when you start plugging in some more extra money into this, This is a mind blowing concept, guys. And somebody who doesn't understand what is the power of compounding, it relies totally upon the long haul. So, this is the reason why index funds, when we talk about index funds growth, even though there is a recession in 2008 or probably a small down movement in 2021 or probably some cycles here and there, but you're not talking about 2 months, 3 months, 2 years, 5 years. No, you're talking about 10, 15, 20 years. So even if there was a meltdown in economy, recession, downward movement, there were times when the economy was doing very well. So down and up and up and down. And I'm going to show you uh, a similar chart for one of the index funds, which will tell you that over a long period, right, if you stay invested, guys, this is the key. Do not step out of, see, stock market is governed by two strong emotions. One is greed, another one is fear. Do not be party to either of these, especially now when you understand the fundamentals of that, right? So when the market is going up, a lot of people have this FOMO that I probably have missed the Nvidia bus, let me just get into that, right? You probably end up buying the stock is 900, 915, 930, right? And you realize the next day it starts going down because it was at its peak. Now there needs to be some correction. So greed is what gets you in at the wrong time, and fear is what makes you get out of the game at the wrong time. So when the market is down, which means when everybody is selling, right, you get scared. Oh, everybody's selling, my friend is selling, this one is selling, my colleague is selling, market is bad, it's crashing. It's not crashing to zero. It's a correction that is due every couple years, and that will happen. That's how the economy works. So just stay away from these two emotions, greed and fear. Stay invested for a long term, and you will see your wealth growing at a very steady pace of 10 to 12% year over year. By steady, I do not mean that every year you'll have a 10, 12% growth. No, there'll be some years when your growth will be probably 10%. Some years the growth will be minus 10%, minus 20%, years like 2008 or maybe some portion of 2021. But then there'll be years when you will have 50, 60, 70% growth. And when you look back over a 10, 15, 20-year period, you will see that from where you started and from where you ended, right? If you look at the rate of return between these two time periods, you will clearly see for yourself, what I'm talking about. So, guys, it's not for the faint hearted, but at the same time, power of compounding works in both ways, in the positive as well as negative. So let this power work positively for you. When you're investing in something, stay invested for a longer time period, and especially invest in these stock, in these index funds, because they have a conglomerate of companies that they plug the money in, right? So it's not that if one goes up and one goes down, so you are a washout. No, at the end of the day, market will make money. Look at S&P 20 years back or 10 years back. You may have picked up a stock or two which probably was doing excellent 10 years back, but it's not even anywhere closer now, right? Because stock is what, it's just a business. They come in and they go out. But if you look at the index as a whole, S&P, Nasdaq, you look at a 10, 15, 20-year time period. Overall, for an economy, the index will go up over a long period. So rest be assured, do your due diligence, but start investing. Understand the power of compounding, run these numbers for yourself, and just get into the game and stay invested for a long period. Hope guys you found this video valuable. Let me know in the comments below how did how did you feel about the concept of compounding, whether you liked it, whether this was something new for you, or whether you knew it already. And just open a spreadsheet, do the numbers for yourself in your particular case, right? And see the magic of compounding unfold. And once again, if you have not subscribed to this channel, please consider subscribing so that I can share all these wisdom nuggets with you all and we can grow our wealth together. Thank you.